Welcome, folks, to Crypto News Global. I'm your host, Nick Toka, and Bitcoin is pumping in the green again, currently up 7%. On today's show, BlackRock adds its IBIT Bitcoin ETF to alternative asset model portfolio. Bitdeer buys the Bitcoin dip with BTC price set for the worst month in 3 years. Also on today's show, Bitcoin SellOff could be a textbook breakout and retest play, according to Godbole. All this and so much more on today's show. Welcome, folks, to Crypto News Global. I'm your host, Nick Toka. Today is February 28th, 2025, and Bitcoin and the entire market is in the green today after 4 days straight of blood red. So let's get right into our market watch and Bitcoin technical analysis so we can take a closer look at what's going on. Currently, Bitcoin at 85,836, up 7.5%. Ethereum up 7.5% to 2273. Solana up a crushing 15.5% and rising $146.54. Doge up 10%, 20 cents, 21 cents almost right now. So a big turnaround in the Bitcoin market. SUI up 11% to $2.82. XLM up 15%. Litecoin up 14%, it looks like. Let's get into the crypto bubbles to get a better perspective. And we will call it 99%. Pretty much everything currently in the green, including PLSX up 80% for the day, Hex up 75%, PLS up 45%, Trump up 25%, HBAR up 20%, Bear up 11%, Solana, as mentioned, up 15%, Sonic up 17%. Zooming out for the week, we have for the week still a bunch of red, about 90% into the red. On the green side, we've got Pi up 220%, Hex up 33%, IP up 25%, Bear up 22%, PLSX up 39%, Pulse X, that's PLSX, which is up 39% on the week and 32% for the month. And zooming out to the monthly, we get, again, approximately 90-something% in the red. Sonic up 52%. Maker up 40%. Tel up 50%. PLSX, as mentioned, up 31.5%. Let's check out the current crypto market cap. We've got Bitcoin at $1.7 trillion and rising, down up 7.5% right now, but for the week down almost 11%. Ethereum 274 billion, XRP 127 billion, Solana up 74 billion, Doge up to 31 billion, Cardano 23 billion, Tron at 20 billion, sitting in the number 10 position. Let's check out the total market cap. We've got a 2.79 trillion total crypto market cap, with Bitcoin taking up 61% of that, Ethereum at 9.82%, XRP 4.5%, BNB 3%, and the rest of the coins combined 8.6%. Crypto Fear and Greed Index currently is at a 20 in extreme fear. Yesterday it was 16, the day before was a 10. And last week was a 49 in neutral. There's approximately 1,140 days left until the next Bitcoin halving. There's 164,206 blocks to mine until that time. And until the year 2140, there's 1,169,394 coins left to mine until every Bitcoin is mined by that year 2140. And let's not forget, by the year 2033, we're already at 99% of all Bitcoins will be mined by that time. Going into the total market cap, top assets by market cap, we've got gold at 19.2 trillion, Apple 3.6 trillion, Nvidia 3 trillion, Microsoft 2.9 trillion, Amazon 2.2 trillion, Google 2 trillion, silver 1.784 trillion, Saudi Aramco 1.749 trillion, Facebook 1.692 trillion. And let me refresh this because, yes, Bitcoin has flipped Facebook at 1.7 trillion back in the number 9 spot. It was sitting in the number 7 spot for quite some time, and I expect that it will get back there shortly. And you can currently get 1,168 Satoshis for 1 fiat US dollar. Taking a look at the USDebtClock.org, we have the total U.S. debt right now at 36,539,246,000,246. That equals to 107,377 per U.S. citizen and 323,047 per taxpayer. So a lot's happened since yesterday, and we definitely have a Bitcoin pumping in the green. As mentioned before, when we get that crypto fear and greed index down into extreme fear, we can expect a pump, and that's exactly what we've seen. A huge pump for a lot of the coins out there. We have some news from BlackRock. BlackRock adds its IBIT Bitcoin ETF to alternative asset model portfolio. The world's biggest asset manager added a 1% to 2% allocation to its target allocation portfolios. BlackRock has added the iShares Bitcoin Trust, the fund issued by the asset manager that holds Bitcoin, to one of its model portfolios. These models suggest portfolios in rebalances, which are then followed by advisors and platforms who can also request adjustments to the models based on their investment needs. BlackRock added a 1 to 2% allocation to IBIT in its target allocation portfolio that allows for alternative assets, according to James Seifert, ETF analyst at Bloomberg Intelligence. In a report from Tuesday, Michael Gates, lead portfolio manager for BlackRock's target allocation ETF models, wrote that there are several substantive arguments that support Bitcoin's long-term investment merit. According to Gates, this includes the crypto assets novel store of value and global monetary alternative, as well as hedge to the US dollar hegemony and political instability, and proxy play on the online digital transition of goods and services. Collectively, these features may help provide unique and additive sources of risk premia and diversification to traditional multi-asset portfolios, Gates wrote. The model represents one of IBIT's smaller portfolios, however. This step is significant given that it's the first time BlackRock's had made the decision to add IBIT to any of their models. This is a big deal because this is the first of those models to add Bitcoin, said Seifert. It probably won't be the last, but Bitcoin is also a lightning rod for many. Some will hate this while others will love it. So I don't know if or when they'll add the IBIT to their primary models that have a lot more money tracking them. BlackRock's model portfolio managed around $150 billion in assets as of December 23rd, December 31st of 2024. And they've added a correction in here. Correction, February 2028. adds that BlackRock's model portfolio manages 150 billion in assets as opposed to 130 billion, which the article incorrectly stated previously. So BlackRock added, basically these are set portfolios by BlackRock, and a lot of the big fund managers will do this. They'll bundle a bunch of different stocks and potentially even commodities into a basket, and then they sell this actual a fully encompassed model portfolio to their clients. So now there's a couple percent in this specific portfolio. So when somebody purchases BlackRock's portfolio, then they'll also be exposed to 2% Bitcoin. So it appears this is the first time BlackRock's done anything like this. Before that, it was simply you would buy the IBIT or you wouldn't buy the IBIT. Now, if you're buying this specific asset portfolio, the ETF alternative asset model portfolio, you're also getting an allocation into Bitcoin of 2%. So actually, big news coming from BlackRock. It's good to see that they're allowing a exposure to Bitcoin, even, indirectly. So in most of these funds, you're talking about a couple percent of each stock security. They'll have bonds in there, and now for the first time, they also have Bitcoin in there. So in the past few shows, I've been talking about buying the dip, and I said personally I'll be buying the dip. And there's a great story here. We're going to our next story where Bitdeer buys the Bitcoin dip with BTC price set for the worst month in 3 years. Bitdeer currently holds 855 BTC, valued approximately 69 million. Bitdeer Technologies said it bought 50 Bitcoin, taking the opportunity to build its stash as the price of the largest cryptocurrency looked set for its worst month since July of 2022. In a tweet, Bitcoin mining company said it paid an average of 81,475 per Bitcoin. The purchase takes Bitdeer's total Bitcoin treasury to 855 BTC, worth approximately 69 million bucks, according to data from Bitcoin treasuries. The company's shares fell 0.64% at open, just below $11 as Bitcoin and the broader crypto market dropped 4% over the 24 hours. The crypto market rallied at the start of the U.S. trading, taking BTC above 82,000, and as we see, it's way above 82,000, almost hitting 87,000 right now. So, some bigger whales out there also bought the dip. So, and I don't blame them. The price was on sale. Now, let's think about this, though, strategically. Of course, after 4 days of Bitcoin dumping, based a lot on tariff talks, tariffs to take place starting March 4th to Mexico and Canada, and then April 3rd or April 2nd, actually, for the EU. So we saw a big dip. We also had incorporated in there the IBIT hack of $1.4 billion from the Lazarus group from North Korea. So things definitely dipped, and here's a respectable chart here showing the head and shoulders type pattern. So let's get into our next story, and they're talking about the Bitcoin sell-off could be a textbook breakout and retest. And this is Godbole who's giving out this story. So they're suggesting that, the bounce, here we go, the breakout in this chart, which was just late, this was November of 2024. the head and shoulders headed for a retest. So we've got the head and shoulder pattern starting in November 2024 up in green, then the head pattern, first shoulder on the left, head in the middle, and then the shoulder dropping on the opposite side. Very symmetrical look we've got here. And then after that, bounce can bring bigger rallies. Former high, now support. So we never did get down to this 73.5, or 77 is right about this line here. Once it hit that 79, I think I saw 78 and change mark, things definitely went bullish from there. Now, having said that, we mentioned tariffs. So the tariffs actually haven't even taken effect yet, right? So meanwhile, the crypto market is bouncing up and down like a ball. If we take some good gains, we could see that the Bitcoin price dips again when these tariffs actually do come to fruition in, it looks like 4 days. You know, that would bring it March 4th on Tuesday. So I'm hoping we've seen the worst of the downturn, but you know, depending on what happens with these tariffs, I've said before that I feel like we're almost immune to this talk now, but clearly we weren't. You know, the more people talk about things, and I mentioned this with the last bull run, we had Elon Musk and the Doge talk. So Musk came out promoting Doge. Musk came out saying, you know, I bought Doge. I bought this much Doge. I'm behind Doge, the people's money. And Doge, you know, blew up like a rocket, went straight up. And then that happened maybe 2 or 3 or 4 times. Every time Elon tweeted anything about Doge, the price would skyrocket. Then it got to a point where no one cared anymore. They were just tweeting this out every day, every 2 days, and it was just like redundancy. So I almost felt like recently the same thing was starting to happen with this tariffs. About a month ago, there was the tariff talk. The crypto price tanked. And then things kind of balanced out. You know, they made an agreement with Canada. They made an agreement with Mexico saying we're going to put these tariffs on hold for 30 days. The prices balanced out back to where they were, back around the 97,000 US point, and again traded pretty much sideways for the majority of last month, or February. Now, of course, when nobody's done anything, at least in the news, about the tariffs, and Trump comes out and says, okay, now I actually have a date, 30 days are up, and it's going to be March 4th, suddenly the market starts tanking, and it was a full additional issue with this Lazarus hack. So everything culminated all in the same time period, a couple days, and the price dropped, as we saw the biggest drop since 2022. So huge dip in the market. Currently up 7.5% to $86,000, up from what I saw was 78 grand. So up, you know, $8,000 in a day. And this is the kind of volatile pricing that you only get this in the cryptocurrency market. And this is actually why I think we love the crypto. traditional finance, you might get a couple percent. Maybe some great news comes out or some good earnings come out and you get a pump of, 3%, 5%. Very rare that you get anything over, 10%. But then, looking at the crypto bubbles here, we've got things that are up, 82% in a day, right? 45, 76%. So even the conservative coins, Doge, 11.5%, Bitcoin, 8%, Trump, 25%, XRP, 10%, Solana, somewhere in there, was 15%. There it is, 16% now. So to me, this is kind of what we love about the crypto market. You don't get this anywhere else. You don't have the opportunity to turn, $100 into 100,000 potentially if you play your cards right. Choose these little, shit coins and get lucky at the same time. Now, meanwhile, the tariffs, right? Back to the tariffs. When the tariffs come actually into effect on March 4th, if they come into effect, because we've got the Canadian and the Mexican prime ministers, they're scrambling yet again in reaction mode. They had a whole month. They haven't done jack all, right? At least in the news. You would think they'd have some public announcements talking about, oh, we've done this, Mr. Trump, President Trump, we've now eliminated 100% of the fentanyl coming across the border. We've now eliminated 100% of the illegal immigration. You don't see anything like that. Maybe it's happening in the background, but I haven't seen shit. And it's been a month. So, Trump comes out, instead of Trump coming out and saying, oh, fantastic, guys, friends, partners, neighbors, Mexico, Canada, you've done such an amazing job. Thank you. You know what? These tariffs maybe are overblown. Let's do some other negotiations. No. They've done jack all. There's been no communication and no meetings about this as far as I know. And this is what you get. The price is dump. So if these tariffs go into effect, I wouldn't be surprised at all if we see the head and shoulder pattern complete its cycle down to the 77 resistance level, back down a bit. If something comes out and yes, we've now come to agreement, countries, neighbors, you've done a fantastic job. You know what? Maybe I went a little far with the tariffs. Let's work this out as friends, as neighbors. Instead of tariffs, we'll do ABC. Or instead of tariffs on everything, we'll put tariffs on, a smaller tariff on these goods, and you guys tariff this. Or, oh, you know what? Maybe instead of tariffs, we'll make an agreement to create a new pipeline from Alberta, Canada, down to the States, which they've been Biden shafted his first week in office. So this kind of news would be so bullish, and I think we would see the market pump like mad. Of course, we're still waiting for the Bitcoin strategic reserve, but I don't expect any news on that until June or July. They've got 180 days to go back with their findings. And so that's the maximum amount of time. Certainly they might come back and say, you know what? Yes, it's a good idea. We should buy Bitcoin. But there's also a very good chance that we're going to see this stretch out all the way until July, until they actually make a decision on a Bitcoin US strategic reserve. So the Bitcoin sell-off could be a textbook breakout and retest, says Godbole. And we've gone through this chart a little bit. Let's get right into the story. Remember the last time we went on vacation? After locking the door and heading toward your car, you likely turned back abruptly to ensure that the lock was secure before continuing your journey. You mean like every single day I leave my car? I don't need to go away for that. Financial markets led by a range of human emotions, exhibit similar behaviors. After a convincing move beyond a long-held resistance, assets typically return to confirm the validity of the breakout. That serves as a test of the strength of the former resistance turned support, following which big rallies unfold. The breakout and retest play phenomenon is well known across the asset classes. Bitcoin's ongoing sell-off might be just that, a healthy retest of the breakout point or former resistance turned support of 73,757 breached in November. In other words, the downward momentum could run out of steam at our closer to these levels, potentially setting the stage for a bigger bull run. Here they show exactly the same chart, except they add in the number, which is the resistance point here, the former high at this point. So we could hit this point to complete the head and shoulders pattern. BTC has dropped over 15% to under 80,000 this month, exposing the former resistance turned support at 73,757. Prices broke above that level in early November, ending months-long consolidation after pro-crypto Donald Trump won the U.S. presidential election. The tendency of markets to retrace or revisit the breakout point before staging a more enormous rally has its roots in the behavioral aspects of investing. People are generally risk adverse when it comes to securing gains, so when facing profits, traders quickly book those instead of allowing the winning trade to run wild. The so-called prospect theory explains why post-breakout rallies abruptly run out of steam, often leading to a retest of the breakout point. BTC holders have been taking profits around the $100,000 mark since December. Now, as prices turn lower and near the breakout point, in this case 73,757, market participants who missed the initial rally jump in, ensuring the level holds. The resulting bounce from the former resistance turned support draws in more and more buyers, potentially yielding a bigger rally. That's precisely what happened in the third quarter of 2023 and August of 2020. So here we've got August of 2020. As you see, we have a very similar head and shoulders pattern. The breakout point, the retest at the end of the head and shoulders pattern, and then the breakout point as seen here. And in 2023, the breakout, the head and shoulders pattern, the retest, and we have kind of a double head and shoulder pattern here, and then lastly the breakout. On both occasions, the breakout and retest produced bigger rallies to new record highs. Traders, however, need to note that a failed retest or lack of a meaningful bounce indicates underlying weakness that could evolve into a full-blown downtrend. Over the years, I've seen numerous examples of retests and breakout and breakdowns leading to bigger moves in traditional markets. Consider the yield on the 10-year Japanese government bond. It triggered a double bottom breakout in January 2024 and revisited the breakout level multiple times before rising to multi-year highs. So here they've got the Japanese 10-year bond example, where we have a similar kind of pattern, not as pronounced, but we've got the breakout point, the kind of sideways trading, the retest, and then again a very quick head and shoulders followed by a huge retest. The Australian US dollar pair divvied out a major support trend line in December, hitting a deeper slide. The pair bounced to the trend line resistance early this month, only to see sharp losses this week. So in this case, we are going the opposite. Here's the breakdown, here's the retest, and then we're going to test the price lower in terms of US dollar over the Australian dollar. So interesting. Just to give some credit here, Godbole is a co-managing editor at CoinDesk's market team based in Mumbai, holds a master's degree in finance and a chartered market technician member. Okbar previously worked at FX Street. So some interesting information. If we flip back to this chart, we can scrutinize it a little more. So we're seeing the head and shoulders pattern, the breakout point, which happened in November, huge gains, all green candles like mad here. God candle, I remember in November, which is a one-day gain of over $10,000. That definitely happened November 2024. And then the sort of sideways trading for an extended period of time, followed by, of course, the bad news, the breakdown in price, and the retest of the existing all-time highs, where at that point, a lot of people, as noted, people who weren't able to get on board with Bitcoin now are able to jump back in. Additionally, there are going to be people that took their profits when things went way up here with these God candles in November throughout this period of consolidation for between November and now, and before the price dropped again. And the price also partially dropped because of people taking their profits at this point. Of course, we've got the tariffs and we've got the hack, but there's also the profit taking. Let's not forget that. So in terms of this week coming up, we could see another retest of this support at approximately 74 grand. If we do, I'm definitely buying the dip, and I think a lot of the big players will also be buying the dip in anticipation of the next breakout point, which hopefully will be these parabolic gains, and I'm hoping for multiple God candles in the coming months. Once we go into the historical patterns for the BTC and we go into the previous Bitcoin 4-year cycle, we'll see here that there's a double peak of a test of the all-time highs, right? So we had the first big all-time high in middle of April, and then we had the cycle peak in late October, early November, and again, you know, a big dip followed that. So I feel like in terms of time-wise, we're currently sitting, you know, somewhere in here, right? So we've got the first parabolic climb. This is in 2021, by the way, what I'm pointing at here. So a big run up in 2021, followed by peaking first January 11th, which was the day. January 10th is when the ETFs started trading, and then followed by, you know, a sell the news dip, then followed by a huge rally. So right now we could be seeing a similar kind of thing. See, we've got a bit of a head and shoulder pattern here, which happened in February also last year. Also last Bitcoin cycle in 2021. And then we followed up by the retest of all-time highs. So I'm anticipating we get some kind of similar trajectory this time around, and it very well could then be followed by another dip to retest the lows, and then going up to the cycle peak in October, November. Hopefully these charts help you guys understand what's really going on right now, and let's hope it's this predictable and the cycles follow what happened traditionally in the past in the other 4 years of cycle peaks. And if they do, at least things are predictable and we'll be able to make a fair judgment on when we should be buying, when we should be selling. Again, if you don't have the heart for it, certainly hodling throughout the cycles, hodling 8 years, 10 years is certainly a good way to go. And until now, everybody that's hodled throughout these cycles has made money. So hopefully these are some fair thoughts for you guys to go by. And again, this is in no way, financial advice. Do your own research, figure out what's best for you, create your own charts, and kind of stick by it. Listen to the news, listen to shows like mine, listen to other competitors, Bitcoin news, do some reading, and hopefully you can come up with a good representation of what you want for your plan. Always remember, guys, that money is abundant and money is everywhere. It's time that's what's scarce, so spend your time wisely. Also, stop making the banks rich. Spend less money than what you earn. That way you won't have to use debt in your personal life. If you start making more money, start saving more money. Don't start spending more money. And if you've got an idea that you think is great, start that idea today. Even if you're not ready, start today and things should slowly come together for you. I'm on track to get 500 plus subscribers this year, so it would be great if you came along for the ride. Please click the subscribe button. If you found this stream enjoyable, please share, like, comment, and of course subscribe. And we will see you on the next stream, folks. Thanks for joining.